Hot diggity dog, welcome back to the Invested Dog. And today we are going to be talking about Frontier. If you want to go straight to the Frontier stock and the analysis, go over to the 7-minute mark. As for everybody else, let's talk about why Frontier is in the situation that they're in. Frontier Airlines sees opportunity to absorb demand seizing because of coming from Spirit. Frontier is expected to be 3 to 5% unit revenue uplift from Spirit's exit. I don't know if that's actually going to be the case, only because the oil prices are still so high. Airline share up to 8%. Carrier expects bigger than expected Q2 losses. As of May 5th, that came out today. Right now, it's almost 9 p.m. on May 5th. Frontier Airlines, ticket symbol ULCC, said on Tuesday it expects to absorb significant demand from the shutdown of their rival Spirit Airlines. I am so sad that Spirit is gone. This is not going to turn out the way that Trump thought. This is not going to turn out the way that investors thought. It's a shame that almost 17,000 employees were let go from Spirit Airlines, now back on the job market, now filing for unemployment. It's an absolute shame. And this is a move that it says that will boost the revenue thanks to the larger number of shared routes. Spirit collapse removes Frontier, freezes competitor over 100 of overlapping routes and affordable Frontier rooms to capture market shares and boost its pricing power. Yeah, Frontier and Spirit at one point were planning on joining up together. They were planning on putting all their money in one pot and being one airline. The budget airline expects the unit revenue to raise 20% in the second quarter, driven by efforts to recoup evaluation, fuel costs, and resilient travel demand in the Spirit's exit. It expects the recovery to be about 35 to 45% of evaluated fuel costs in the second quarter. Let's go over to our second article before I run out of time. I do want to also just touch on JetBlue just a little bit because JetBlue is kind of in the same position in a sense. Frontier, the ultra-low-cost airline, Frontier Group Holdings, ticket symbol ULCC, missed Wall Street's revenue expectations in Q1 of 2026, but sales rose 8.8% year on year, and that's $992 million. That's a pretty decent increase. Revenue $992 million versus the analysis estimates of $1 billion. $1 billion. And that's 8.8% year over year on growth. Yeah, that's a little bit of a steep miss. Very steep miss. Airlines operate at such a tight margin. It's a shame. I have no idea why they operate at such a tight margin and don't have a lot of reserves. Recognizing for the colorful animal admiration, in a sense, that's what Frontier is known for. A company, their long-term performance is an indicator of an overall quality. I say that all the time. If you really want to take an estimate of how a stock is doing, look at their overall well-being. Spirit was pretty high, but after starts with the C, I can't say the word. Starts with the C, ends with a emic. After that, they were never able to return, and their misalignment with money, they were building new headquarters that was not needed. They were building apartment buildings that was not needed. Any business that can put up with a good quarter or two, but many enduring ones can grow over the years. Any business can. Any business can have a good quarter here, a good quarter there. They met their earnings per share here. They met their earnings per profit here. But it has to be consistent. And Spirit was not able to do that. And I wonder if Frontier, if JetBlue, if Southwest, if United is in the same category as that. Additionally, 5 years around, again, can't say that word because I get demonetized. When revenue was depressed, then they rebound. So since 2021, they were going up, and they've been kind of stair-stepping their way up. It's been a little bit stagnant, but they're getting there. They're getting there slowly but surely. We at Stock Story, this is the company that I'm taking the article from in TradingView, places the most emphasis on long-term growth, but within consumer discrepancy. A stretch historically view may miss the opportunity of this company. Q1, like I said, they lost revenue, but in Q2 of 2021 they were able to make it up, and it's been going down a little bit ever since as far as revenue, but total revenue, yes, it's been a little bit stagnant. And Frontier's operating margins has struck over the last 12 months and averaged negatively 4.5% over the last 2 years. Unprofitable consumer discrepancy companies with falling margins deserve extra scrutiny because they're spending loads of money and they're trying to stay an unsustainable practice. They're trying to sustain an unsustainable practice. I don't know if Frontier will be able to step up and not follow in Spirit's footsteps. Let's go over to this next article. I want to talk about JetBlue and Frontier stock surge as Spirit Airlines collapse opens room for growth. Yes, Frontier, JetBlue, they were big in the Fort Lauderdale airport, just like Spirit. So now that Spirit is gone, JetBlue, Frontier, Southwest, United, Delta, they're all gonna have to step up and replace that whole entire load that Spirit once had. JetBlue and Frontier stock rose in pre-market trading Monday after Spirit Airlines ceased operations with both carriers, moving to capture the displaced passengers and expand into markets that Spirit once had. I don't know. JetBlue stock, they rose about 5%. Frontier gained about 4%. Again, they're still overall down because of their revenue is overall down because of the high fuel costs. Spirit shut down before dawn on Saturday, according to CNBC, after failing to reach a deal with the board holders on the government-backed bailout. A little thing that people don't know about this government-backed bailout is that, yes, they offered $500 million. However, with the amount of planes that Spirit had, it would have been bringing down their valuation for each plane to be about $11,000. And as you know, these planes are expensive. It's hundreds and thousands of dollars to have these planes to operate these planes. So $11,000 is just not going to cut it. The government would have essentially been getting Spirit for free, it's an unfortunate news. JetBlue CEO Joanna said that in a statement that the airline is in a unique position to help Spirit customers get where they need to go. I believe it. Even though they are in a hard position, I do think that they can help out. Let's go to this next stock article, only for 30 seconds, and then we can get into the actual stock. Frontier, finally, here's some actual numbers that they're talking about. Frontier offers discounts almost 200% for summer flight passes after the Spirit closure. And last but not least, of course, Frontier Q1 adjustment widens, operating revenue rises, issues Q2 adjustment losses. So now let's get into the stock. Let's get into the bare bones and the meat and potatoes, essentially, as I should say, for this video. You know that here at the Invested Dog, we love to talk about all things revolving around a recession. Recessions are meant to transfer money into your pocket if you know what to do and you know what to look for. Let's take a look. It opened at $3.72 and it closed out today, May 5th, at $4.32. That's a decent size return. I was expecting it to be a little bit more, of course. And for the last 5 days, if you would have bought this 5 days ago on April 29th, let's say right before Spirit announced that they were going to close down, you would have been up 15.3%. 1 month ago, it's almost like Frontier knew that Spirit was going to close down, and it's up 21%. 6 months up 13%, and 1 year up 24%. Let's go down. You know what? I don't want to leave out the 5-year. It's down. This was always important. When you look at a stock, again, you look at the overall history of it. You don't just look at this 1 day, 5 day, 6 month of a stock. It's down almost 80%. That is no bueno. Any stock that's down and then continuously going down, yes, 6 months here, a year here, they are hitting what they need to hit. However, long term, they are not doing well. And they're losing money from 2021 in the other article. We know that they've lost money year after year after year. In 2022, they lost $17 million for earnings. In 2023, they were able to make $28 million, but their revenue was so much higher. The revenue was $3.59 billion. In 2024, they were able to make $53 million, but the revenue was $3.77 billion. For Q2 of 2025, they missed that. However, they were able to beat. Ever since then, we're still waiting for Q2 of 2026, but I don't know. And the same thing goes for the analysis. A lot of people are saying they're not sure about Frontier. Their ticket symbol ULCC. They're not sure about them. A lot of analysts are saying hold off on them. A lot of them are saying buy on them. Only few back in February are saying, okay, fine, it's a strong buy. The price right now, it's $4.37, and it should be at $4.59 or $8. The average, it should at least be trying to beat the average. I'm not sure about this stock, only because they're not doing what they're supposed to be doing, and these fuel prices are rising significantly, and we don't know how long they're going to be up there for. So it may be a better investment for you all to wait, especially since we could be in a parentheses recession. I think that you should wait to buy the stock, or if you do, only buy a little bit. If you do, only buy about $100 worth of the stock. Do not go all in. Do not put all of bet your retirement on this stock. And with that, you guys, this is the Invested Dog signing off. Until next time, let me know what you guys want to talk about in the next video. Have a great day, you guys.